Hey everybody, what's going on? It is James here, and in this video I wanted to sit down and continue talking about bigger picture charts, and we're going to zero in on Bitcoin. I'm going to walk through some more relative strength mindset stuff and walk through where I think the money is flowing to and why Bitcoin is likely to flop. So in this video, we will take a look at basically a couple of charts real quickly. I did a video on this one already, so I'm not going to go deep into it. If you haven't seen that video, make sure you check it out. This is showing Bitcoin versus the Mag 7. I've done, plenty of videos in the past talking about things like relative strength versus the QQQ, and we'd always looked at it through the lens of a bubble chart that looked like this. This is versus US dollars, so this is absolute value of Bitcoin. Let me get this smushed down so you can see it, right? It's been looking pretty good, but it's been chopping around a lot through here. So I am starting to have some doubts about Bitcoin's value versus the US dollar. I'm not going to go deep into that, but I am going to talk a lot about this. This specific chart is Bitcoin versus NVIDIA, and it is a very clear picture of why I think Bitcoin is going to perform poorly over the next couple of years. So essentially, when somebody first looks at this, they're going to assume this was like 2017 or 2020, 2021, but it wasn't. This was actually way back in 2013. This was the value of Bitcoin versus NVIDIA. And then, of course, it had its crash, and then it had a run up again in 2017, 2018, like January, December, the top of the US dollar bubble on Bitcoin, the first mania phase. Had another upthrust here in 2019, had another upthrust in 2021, and that was actually what I believe was the upthrust after distribution. And then, of course, we have these points of supply. And I think we are actually pretty well into phase D right now and about to enter into phase E. So I want to talk about, this is the technical analysis side, but I want to talk about the fundamental analysis as well, because they do go hand in hand and they do agree with what's happening. So most people who are in cryptocurrency are unfortunately trying to get rich quick. They don't actually know anything about technical analysis, and they really don't know anything about fundamentals. They just keep repeating and regurgitating the same narratives about a store of value without understanding what that actually means. So I hear from people sometimes who are getting into this and they're thinking they can put in a few $1,000s or $5,000 or $10,000 and it's going to go up to $100,000 or $200,000. And the reality is this: the math does not support that theory. Even in a best case scenario, it's very unlikely that Bitcoin will ever be worth more than $1 million per Bitcoin. And that's assuming like governments themselves start to really, get heavily involved with it and start establishing reserves. And like best case scenario, essentially, we might see $1 million Bitcoin. And so even if you were to put in, $10,000 today and it went to $1 million, you essentially have less than 100,000, and then you'd have to pay capital gains taxes or gains taxes depending on where you live at. And it's really not, it's just for most people, an $80,000 or $60,000 take home profit is probably not going to be life changing, especially in today's day and age with all the inflation. Okay. And that's the best case scenario. The worst case scenario is this thing crashes and the all-time high is in and it never goes back up. So when we look at these charts, here's what I think is happening with Bitcoin. I think Bitcoin was the darling over the last 10 or 15 years. It was a massive speculative asset, especially after the 2017 mania phase, which is when a lot of people first discovered cryptocurrency. Like when I first got into crypto, when I made my first investment, when I bought my first cryptocurrency, it was in May of 2017. But when I mined my first cryptocurrency, it was January of 2014. So I've actually been in this space now in some way, shape, or form for over 11 years. And when I first looked at Bitcoin, it was in 2011. And I know a lot of people have those stories, but let me kind of explain my story in a tiny bit more detail. The first real money that I made self-employed as an adult, as a kid, I had a lawn mowing business that was pretty successful actually, for a kid. But as an adult, my first successful work from home adventure was actually farming gold in a video game and reselling that gold. I farmed so much gold that I set up a botnet, not a bad one, malicious one where I was using other people's computers, but I actually set up 12 computers of my own at my house, bought 12 accounts, and I had 12 automated bots running and basically farming gold in a specific online game. And then I actually sold that gold wholesale to a company called Posada, who then resold it to players. And so that was my first like successful work from home venture. And it was mining or farming gold. So somebody came to me and knew that I did that. And they said, you know, you should really look at Bitcoin because it's kind of like that, but it's like a real life money instead of an in-game currency. And so I did briefly look at it, but I didn't understand the concept. And I was making a lot of money in my business at that time, right? Like a lot of money, like more money than I ever thought I would make in my life. So I was pretty arrogant, being young in my 20s, you know, making multiple six figures a year. I was pretty arrogant. And I was just like, oh, I'm not messing with that. I looked at it. It was like $9 at the time. And I was like, you know, I think it was $11 and then it cost me like $9 to mine it. I was like, oh, it's not even worth messing with. Right. But so my history goes back with Bitcoin 14 years, and Bitcoin, ironically, even though a lot of people view me as this kind of perma bear, I'm not. I wasn't. There's plenty of posts today. Two memories popped up on Facebook. One of them was from 2017, and it was me encouraging people to buy cryptocurrency for their kids' futures. And at the time, Bitcoin was around $4,000 or $4,500, and that post was from 8 years ago today exactly. So I was very bullish on Bitcoin. And then there was another memory that popped up also from today's date in 2019. Bitcoin was just over $10,000. And I was saying, hey, I think it's going to go down to 4,000. But I was positioning it as a buying opportunity, not as a, oh, Bitcoin is terrible, but as a, hey, this is, you know, it could be exciting if you're a Bitcoin bull. And again, we all know what happened. Bitcoin fell to $3,858. So right where I was saying. So I was never a perma bear. I was just calling things as I saw them. And what I think is happening now is something that I actually initially predicted back in 2021. In 2021, I made a post on Twitter and it said, I think we're in the UTAD, or not UTAD, but in the upthrust phase, right? I still believe that's what happened. And the only difference is back then, I didn't think we would get a UTAD. I thought we would get our big $69,000 high. I thought it would crash. I thought it would have a pump, maybe back up to around $40,000, and we'd have like a last point of supply. And then I thought Bitcoin would just kind of crumble. And instead, we've had this really big, you know, bull market that saw Bitcoin go up to $120,000 or $125,000. So I wasn't 100% accurate on it, but I still think I was accurate in the sense that we were in the upthrust. And so we'll look at all that here. So what I think is happening from a fundamental standpoint is I think money is rotating out of cryptocurrency and Bitcoin, and I think it's rotating into AI related stocks. AI is the new speculative darling. That's where the big smart money is, you know, putting their bets, and a lot of them have already placed bets there and obviously have been for a number of years now. But I think it's exactly what's happening. Retail is always late to the party. I see people trying to preach about getting into Bitcoin today and XRP and all these different coins. And the reality is they're promising people that they're early. I'm not saying you should or should not invest in cryptocurrency. That's completely your decision to make. What I am saying is if you do invest with the knowledge that you are not early in any way, shape, or form. You're not early. I remember when XRP was a penny. Okay. There's like 2 cents, and there was like an article that came out about it like way back when, like you should buy this. And then when I bought my first XRP, it was 12 cents. So I don't even know what XRP is right now. It's like $2 or $3. It's already up thousands and thousands of percent. Like you're not early. You know, same thing with Bitcoin. Buying Bitcoin at $110,000 or $112,000, you are not early. Bitcoin was literally under $1 for the early adopters. And that was the super early adopters. But even the people who started buying Bitcoin when it first got like mainstream attention, when it had its first bubble and got to $1,000, it's up over 100x since then. So again, this is Bitcoin versus NVIDIA. NVIDIA, of course, being the biggest, most well-known AI stock. And you can see how it's just went sideways, which looks just like distribution. It looks like a buying climax, automatic reaction. It looks like signs of weakness. We had a couple of upthrust, potentially an upthrust after distribution. And it looks like we've had a couple of last points of supply, and that we are about to enter into the phase E, basically fall off the cliff phase. If we look at Bitcoin versus the QQQ, like the whole tech market, which is, of course, weighted very heavily toward AI right now, we're going to see some similar type of stuff, because this is, let me pull this in. This is what that looks like. And so I believe this was probably a buying climax. This is back in 2017 versus the QQQ. We have our automatic rally for the strength test. We have our signs of weakness. This would have went lower had it not been for BitMEX actually shutting down trading and stopping the cascading stop losses from being hit. It was just going, going, going. Some people went back in hindsight and said that had they not stopped it, it would have continued to cascade all the way to zero, actually, which would have been, really something crazy. But so signs of weakness, this looks like an up thrust peaking just above the buying climax, just like we can see over here in the schematic. And it doesn't have to be exact that, like again, the signs of weakness didn't go below the automatic rally back here. But we have an up thrust peaking above. We have, all this consolidation through here, kind of like this area of the chart. And I believe that right now we probably are in the up thrust after distribution. This is versus the QQQ. And so I believe we're probably about to enter phase D on this chart, where we'll start entering into the last points of supply and eventually into phase E, which I think could take Bitcoin down. Unfortunately, nobody's going to want to hear this probably, but I think we could see Bitcoin start falling back down to these levels down around maybe even as low as, the 2018 lows versus the QQQ. And if it gets really nasty, we may even start talking about revisiting, potentially the 2015 lows. Maybe not the lows so much, but maybe somewhere in this area around 3 to 5 shares of QQQ per Bitcoin. And again, it's not even necessarily a failing of Bitcoin, so to speak. I mean, I just think it's, markets, the money sloshes around. I talked about this in a previous video, and you've got to find out where the money is flowing to. And right now that money is flowing to AI stocks, and it's not flowing into Bitcoin as much. And, it doesn't mean that Bitcoin necessarily goes to zero or anything like that. It can still survive as an asset. It just may be that it calms down. And a lot of people don't understand this, but we have a historical precedent for this. A lot of people who invest in Bitcoin, they want their cake and they want to eat it too. They talk about Bitcoin as being a store of value. They want it to be a store of value. That's their goal for Bitcoin. And they often compare it to gold and say, look at gold, look at gold. Okay, well, that's fine. Let's look at gold. When we look at gold, obviously it looks very, very good versus the US dollar. Its absolute value is sitting over $3,400 per ounce of gold, whereas even, in 2012, it was only about $2,000. And way back in 1980, it was only about $900 to $1,000. But if you adjusted this chart for inflation, you would actually find out that gold just now got back to its 1980 value. It actually took 45 years to break even versus inflation. So we could see the same thing with Bitcoin, where Bitcoin eventually puts in a new high versus the US dollar, like many, many years from now. But versus inflation, I believe we probably right now are seeing, and I say right now, it doesn't mean like this exact dollar. We may have a blow off top that takes it higher, before the cycle ends, this particular cycle. But I believe that whatever we top at in this cycle, I believe that will be the highest inflation adjusted value of Bitcoin probably ever. That's my opinion. And it's just an opinion because I can't tell the future. But again, we have technical analysis showing us that we have these different charts all showing distribution. This is, Bitcoin versus the Mag 7. We just looked at Bitcoin versus the QQQ. We looked at Bitcoin versus NVIDIA. So we have technical charts saying, hey, we're probably in distribution. And then we also have fundamental reasons that, distribution makes sense. And that is money flowing away from cryptocurrency, it being less of the speculative excess asset right now, and flowing into the AI assets and creating an AI bubble. And the irony is, again, while I've never agreed with the determination that Bitcoin is a store of value, this could be the path for it to become a store of value. If it crashes and goes down to, a low enough number, we may see some governments really start to seriously eye making this a strategic reserve. And it could be that that's how Bitcoin becomes digital gold. But even in that case, I think it's a long-term play, right? I don't think it's something that's going to happen quickly or overnight. And a lot of the price of Bitcoin is driven by speculation and get rich quick, fear of missing out type of mindsets. And those mindsets are starting to rotate away from crypto and into other adventures. And I think AI, um, I've done some posts about this. I've done some videos about this. I think AI will end up creating a enormous bubble that when it pops, we'll see pretty much everything in the speculative risk on world. I think we'll see all that bleed out and money flow into some more value-based stocks, bonds, safer investments for a while until the mess cleans itself up. I ought to talk about the fact that I'm a capitalist, but I don't believe in runaway capitalism, which is what I believe that we're living in with, a lot of companies. We have runaway capitalism where they used inflation as an excuse to raise prices, but in reality, they're showing record profits. They're paying people, wages that don't allow them to live decent lives, but then they're, giving out huge bonuses to CEOs and saying, well, we had to raise prices for inflation, but they didn't. That's what I consider runaway capitalism, which is a bad thing. And I think in markets, we have runaway speculation, right? We went so far past regular speculation into what I consider to be pure mania. And so I think it's going to lead to some very difficult times for those people who aren't properly positioned. The irony is a lot of people who were positioned in cash during the Great Depression actually enjoyed life probably more then than any other time because the dollar was actually gaining purchasing power. They were going through a period of deflation where their dollar was actually getting stronger and stronger, and they were sitting on bunches of dollars. So the reality is if you're positioned properly and we have a horrific meltdown, it could be that you actually come out smelling like roses, not tulips. So with all that being said, please remember I am some guy sitting in a spare bedroom. Nothing in the video is financial advice, and you should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Be sure and give the video a thumbs up, subscribe to the channel if you haven't already. Feel free to leave me a comment if you have a counterpoint. I love chatting with people even when they don't agree. I think that's what makes the world great is when two people have different opinions and can have a civil and cordial conversation. And a lot of times that's how you learn things. That's how you learn and see things from a different perspective. Not just for other people seeing it my way, but sometimes it helps me to see it their way as well. So thanks for watching, and I'll see you soon.